learners, profession, to my that is business. Today I'm going to talk on how you can make a balance sheet. For instance, the following balances were extracted from the books of Wasco Traders on 30th October 1995. Cash, we have 20,520, bank 160,230, premises 800,000, debtors 40,000, creditors 62,000, 2-year loan 40,000, stock we have 2,500. So required, prepare a balance sheet. As whenever you have been given a balance sheet, you need to make it, and the first thing that you have to do, you have to start with the name of the business. For instance here, the name of the business is Wasco Traders. So you come here and you write Wasco Traders. You write Wasco Traders. That's the name of the business, Wasco Traders. So Wasco Traders is the name of the business. From there you write the word balance sheet. You write balance sheet. You write balance sheet. And then you write the date here as at 31st October 1995. So you come down here and you write as at 30th 1995. So learners, that's what was 1995. We are looking to that side capital as well as the liabilities. Remember, we have two types of assets. We actually have fixed assets and also current assets. So in this case, you are going to write here, you write here shillings, you write here shillings, you also write shillings, also write here shillings in that manner. The words, you write the words assets, you write assets. After writing learners, you underline assets. Under assets, you now write the fixed assets. You write the fixed. You write the fixed. You write the fixed. You write the fixed. You write the fixed assets. You write the fixed assets. You write the fixed assets in that manner, and you underline. So you underline the fixed assets. Under fixed assets, we have premises. We have premises. So you are going to write premises here. You write premises. You start with premises. So you write premises. And because we only have this as only assets, we only have premises as the only assets. So you are going to write the value of premises on this side here, and the value for premises we have is 800,000. So you write here 800,000. Then learners, if you look at here, that's premises, only assets that we have here. So you move to current assets. You move to current assets. You move current. You move to current assets. You move to current assets. You move to current assets. You move to current assets, and you are going to put a line. You underline. So the current assets you underline. Then under current assets, as you can see here, if you look at what we have here, actually, cash is actually a current asset. Cash is an asset. The bank is also a current asset. That's a current asset. The premises is actually the assets. The short-term liabilities. long-term liability, long-term liability, and stock is actually asset. It is a current asset. Now, when you want the assets will make it, you must start with the most permanent asset. You must start with the most permanent asset, and in this case, stock. Put the stock here. So stock is, you write stock, and the stock is the most permanent asset. Now, because we have so assets of current assets, so you are going to write their values down here. So for the stock, we actually have 2,500. The stock is 2,500, and then under stock, the most second permanent asset is actually the debtors. So you write the debtors. You write the debtors, second permanent asset. So you write debtors, and the value of debtors is actually 40,000. It is 40,000. And then you go to bank. Cash at bank is the third most permanent asset. So you write bank, and the value of bank is 160,000. 230 like that. And then lastly we have the cash at hand. That is called cash at hand. On cash at hand, we actually have 20,000, 520 in that manner, 20,520, and we are done with assets. And then you move here. On this side, we also write shillings. We can also write also the other side shillings also. Then we start with capital. Because for this balance sheet to balance, there must be capital. So we start with the capital, and in this case, we go now to long-term liabilities. Long-term liabilities. The next one is long-term liabilities. And you put a line. You underline the long-term liabilities. And under long-term liabilities, the long-term liability that we have here is a 2-year loan. And learners, a 2-year loan is a long-term liability because it is a loan that is paid. A loan that is paid more than 1 year, we call it a long-term liability. But a loan that can be paid within less than 1 year, we actually call it a short-term liability. But in this case, a 2-year loan is a long-term liability. So you write 2-year loan. And in this case, a 2-year loan, you are going to write it here because that is the only liability that we have. The 2-year loan is actually 40,000, so you write it here, 40,000. And then you come down for the short-term liabilities. The short-term liabilities, and you underline this one. You put a line. The short-term liabilities here, we only have creditors. And because that is the only liability that we have, you are going to write its value here, and the creditors is 62,000. Now learners, now that you have written this, you have to get the total of assets here. The total of current assets here is actually, you add all this, and the current assets, the total you are going to get as 223,250. And then you are going to put a line, and under that, we are going now to write the total assets here. You add this one plus this one here, and you are going to get 1,250,250. That is the total assets. And then learners, you come on the other side here, you come on the other side here. Now here, learners, we are going to get the total liabilities. The total liabilities here, we are going to add the long-term liabilities plus the short-term liabilities. And the learners, you are going to get 102,000. So you are going to get 102,000. You put a line, you underline it like that. And then now, learners, you need to get capital. For a balance sheet to balance, there must be capital. And we therefore we apply the balance sheet equation that says like assets is equal to capital. Assets is equal to capital plus liabilities. This is called a bookkeeping equation or a balance sheet equation. Use that equation to find the capital. Therefore, learners, for you to get capital is actually equal to assets minus liabilities. And in this case, learners, assets, the total assets that we have here is actually 1,023,250. 1,023,250. That is the assets that we have, total assets, minus the liabilities, learners. It is actually here, that's 102,000. So you take away 102,000. Learners, you will get 921. You will get 921,250. And this is your capital. Learners, you will come down here where we have capital and you say our capital is actually 921,250. And then if, learners, you add this capital, that's 921,250, 40,000, you also add 62,000. Learners, you will get 1,23,250. So, learners, as you can see, if you actually take capital, you add the liabilities, that is the long-term liabilities and short-term liabilities, you will get 1,023,250, and then you underline by using two lines. In that way, if you look at the capital side, the right hand side, whereby we have the liabilities and the capitals, you can see that what we are getting here is the same thing like the one that we are getting on the side of assets. Therefore, learners, because the results that we get down here, they are actually the same, they are actually equal, we say that you have made a balance sheet. You have made a balance sheet. Thank you very much, learners. Kindly comment, view, like my video, as we hope to meet in the next lesson. Learners, I hope you have enjoyed the lesson. Do more practice on how you can prepare a balance sheet and you master it. It is very crucial in your exams because it will enable you to get a lot of marks when you're doing your exams. Thank you very much. Kindly subscribe. Goodbye.